We assess technically that silver's now at a point where it's going to outperform gold fairly dramatically. We think the process has already begun. It's likely by the end of the year to see $60 to $70.
Let me ask you this. When was the last time you saw silver at $50? For most people, never. But Michael Oliver is warning that those old highs of $50 from 1980 and 2011, they're about to look like a joke. Silver is breaking out, not just keeping up with gold, but set to outperform it dramatically. The last time this happened, silver almost doubled, while gold only gained about 25%. And right now, the same setup is flashing again. Oliver says silver is dirt cheap compared to gold, and that's why the acceleration phase has already begun. By the end of this year, he sees silver surging to $60, maybe even $70, levels that will shock the mainstream and trigger a flood of money rushing in. So the question is, are you prepared for what comes next, or will you be chasing after the crowd once silver leaves $50 in the dust? Let's hear it directly from Michael Oliver.
I think silver is participating with gold. It vastly outpaced gold in that 2020 rally. Silver almost doubled in price, whereas gold went up about $500, which is like 25%, 30% rally. Silver doubled. So into mid-2020, silver had outperformed gold on a percentage basis. But from 2020 through, the recent low, the silver spread went from like 1.5% of the price of gold down to 1% of the price of gold, even got below 1%. We divide an ounce into ounce and you find it was 1% of the price of gold. If you go back through 50 years of history and look at that spread relationship, you'll see that when you get down to the 1% level, it's time to buy silver. Okay, it's meaning it's dirt cheap. It's not going to go to zero versus gold. Okay, but then the technicals turned, and so over the last 4 or 5 months, you've seen silver outperform gold. Like for example, back in April, gold hit 3,500. It's gone sideways. April, May, June, July, now August. 4.5 months of comatose but steady sideways. They keep trying to sell it, but then go down. But it also doesn't go up. So it's had a sideways correction, which is, by the way, not the way gold ever tops. Okay. During that time, silver's gone up sharply. Okay. We assess technically that silver's now at a point where it's going to outperform gold fairly dramatically. If you go back over 50 years and look at that same spread, you'll see the number of years it got up to at least 2% of the price of gold was like 21 of those 50 years. So it's not abnormal at all. So from the recent low of 1% to 2%, meaning silver could double in relative value to gold, probably over the next year. Wouldn't be surprising me by the end of the year even. Same is true with the gold and silver miners. They're back into outperform mode versus gold. And if you'll look at gold sideways since April, look what GDX has done, vertical. Okay. So I think those parts of the monetary complex are the place to be right now. Silver, the gold and silver miners. Gold will re-engage, and I think it's going to re-engage probably later this month or next to the upside, where people say, oh, it's awake again. Mm-hmm. But silver and the miners will be the place. They've already done that, frankly. Silver had a high back in October of last year at 35. It dropped. Came back up in March of this year, hit 35 again, dropped. In fact, it had a cleansing drop down to 27.50. And then came back up, and in June, it got up above 34 again. Again, not taking out the 35 plus highs. Okay, they were like 35.50 each. But at 34.90 area, we had a major momentum breakout of a structure that said, okay, silver's coming out of this congestion. By congestion, I mean, if you go back to May of last year, silver was 32.70 at a high. You could draw a line sideways through May of this year, where it was either side of that level, up and down, but really just net sideways. Mm-hmm. When it got back to 34.90 in late June, we said, that's it. It's coming out of here. Whoosh, went up to 39. Now, as typical, the price chart guys like to sell round numbers or just in front of them. So let's risk 40, okay? Okay, now we're trading either side of 39 right now on the September contract. We think the process has already begun that you were asking about. we think the acceleration phase in silver and the miners. Now, for instance, GDX has gone from a sleepy upside pattern to suddenly it's now up to near its 2011 highs. We expect GDX not to even stop until it clears its 2011 highs, meaning get up in the upper 60s. And same with the miners in general. Silver, we think in this move, in this acceleration phase for it and it relative to gold, is likely by the end of the year to see $60 to $70, meaning those old antique highs at 50 in 1980 and 2011, which are really sort of jokes. Because one, you were up there very briefly, like days, and back down. And when you do a real valuation, the degradation of the money unit since 1980, the increase in the M2, or since 2011 even, heck, gold would probably have to, silver would have to be $200 now to just match in real value terms those price highs we saw then. So it's catching up. And I think this surge will blow past those, what we call idiot highs. And at that point, what's going to happen? The public's going to say, oh my gosh, I missed this. I got to be in it. And so I think that's when you're going to see an onrush, fairly fresh, of money moving out of the doubting stock market into, hey, I missed this. I got to be in it. The gold, silver miners, and silver. And that's when you get this gush effect, the wet bar soap effect, where everybody's grabbing it, it goes up. And this is not unusual in markets anyway, but especially in these situations, I think I think we're in process right now, in other words. Yeah, and both when you measure silver relative to gold in the bull markets, like 1979, 80, or 2010, 11, silver versus gold was up in the 3.5% to 6% range price of gold. Well, that would mean relative tripling to get to the old bull highs on the spread. Let's say the 3+%. So, we're not right now well above 1%, but you get up to 3%. That would mean, well, I throw this number out a lot, and it's not a projection. I think you'll go way past it. But gold has had two bull markets in the last 50 years where it's gone up ninefold. Okay, if you go up ninefold this time, it means you're going to $8,500 gold, because our low is $1,050. Right. So a ninefold move from 2015 to, that's just replicating what you've done twice before. The circumstances this time are far more monstrous in terms of driving it much higher. The monetary crisis we'll face, the government debt crisis. So stopping at 8,000 is highly unlikely. But even if you went to 8,000, do a tripling of silver relative gold. Silver would be at $240. Is that about right? So okay. So it's the point being, when we go up there this time, also the events in the world, and in the street events, the academic notions about what works, what doesn't, policy changes, institutions collapsing, they'll be institutionalized again. And it won't be a shift to cryptos, okay? Because that jolt could happen. It's going to happen. Whether we get a crash out of Bitcoin or not, we're going to get a massive downside jolt. You don't build that kind of structure, in which case you look across the horizon and you say, well, there's only one place to be. And even governments will recognize that, and they'll make the transition because public demand. So that's why I think when you get up there the next time, don't expect it to implode. Expect instead more like a new reality, a new zone.
Before possibly a new Bretton Woods type moment, right?
Yeah, whatever. But it's, the fiat currency competition, when we run the dollar index, for example, that doesn't really show you the value of the dollar. It just shows you the value of the dollar versus other pieces of paper, okay? That are doing the same thing, just not at the same rate. Or as you said, if they cut rates, that's been helping the dollar hold up a bit better than it might otherwise have been. But when you start cutting rates, then you suddenly, you put more downside pressure on it because you have less incentive to own things in dollars and, et cetera, et cetera. So anyway, all these events are massive potential, not just fundamentally, but we see them technically. Forex, government debt markets, not just our debt market, but Japanese, et cetera. These are crisis type events. And when they unleash, the guys in charge you will find out they're not in charge. And when that reality hits people, that's when arms go up in the air. And I've said this before, Javier Milei in Argentina. I wrote a book 53 years ago called Anarcho-Capitalism. It's debated whether I came up with the term or not. Javier Milei declared himself, this is a year ago, got elected, two dominant political parties, both of which were fascist socialists combined, where they controlled the economy up to here and turned what was the seventh biggest economy in the world into a third world country, virtually, Argentina. He's come back and said, let's tear it all down. Arms up in the air attitude. And the young people said, yes. They didn't understand exactly what his direction was, but they knew he just was going to get rid of the stuff. And he got rid of, for example, the control over housing in Argentina, rent controls and stuff like that, which had caused prices to be so high that the lower class folks simply couldn't afford housing. Suddenly, housing prices have collapsed to where the lower and middle class can now afford housing at a much lower price. He simply got rid of those government controls and those agencies. So it's that type of action you'll start to see here, there, and everywhere. Things just go up in the air. And assumptions you had that will continue, they don't continue. New reality dawns.
So there it is. Michael Oliver believes silver isn't just waking up, it's entering an acceleration phase that could send it to $60 or even $70 by year's end, with miners blasting toward all-time highs. If this interview opened your eyes, smash that like button, hit subscribe, and ring the bell so you never miss these critical updates. And don't stop here. Check out our other videos with insights from the biggest voices in gold and silver. Your support keeps us growing, and together we'll stay ahead of the most important shift in the financial system in our lifetime.